to the Market Profile Trading Academy weekly update. It is Saturday, 4/23/2016. We want to take a look at next week's opportunities, look at areas of interest for you, and of course take a look at the calendar and see what is on tap as far as economic news is concerned. First of all, let's go over to the economic calendar. Big announcements next week, especially from in America. If you're in America, we're looking at the FOMC, which begins on Tuesday, April 26th, and of course following day, the FOMC announcement at 2 p.m. Eastern Time in the United States. Janet Yellen, obviously, and her team will be announcing what they think they're going to do with interest rates. I don't think at this point anybody has any clue what's going to happen. She's been back and forth. Obviously, the central bankers are controlling the markets right now. They're doing everything in their power to keep the markets going the way they want them to go, and at this point they're doing a decent job. Now, they'll do a decent job until they won't do a decent job, and that's when we'll see problems in the market. But until then, we have to keep that in mind. Let's do this. Let's rock over and let's start looking at some markets here. I want to start with the indices, the Nasdaq, the ES, the S&P, and the Russell 2000. I'm not going to look at the Dow. I look at these three. We believe these are enough to look at. They give us a good idea what's happening. Let's start with the Nasdaq here. First of all, I guess before we start with just the Nasdaq, let's take a look at something that we found was very interesting this last week. By the way, these profiles are weekly profiles, okay? And last week we saw a lot of gyrations in all three of these different markets. They all were doing something different. For example, on Thursday after the close, Google announced earnings. Now that dropped the Nasdaq overnight, and of course it continued during the regular trading hours. It rolled down into that 44.31 area and then rallied off of that about 30 points. Now, when all that was happening, the ES was also breaking, but it didn't break quite as hard and make new lows last week. It held above the lows and it rolled back into the actual value area of last week. Then the Russell, it didn't even attempt at the lows. It barely got out of the value area and then of course rolled up and made new highs for the week. So we have a lot of divergence here. We have the Nasdaq trading on its lows of the week and the TF and the Russell trading at its highs for the week. It's a very interesting market right now. We have to watch this very closely. So let's open up the Nasdaq here, take a look at this. Areas of interest next week for the Nasdaq is right below the value area of last week. Is very interesting. We'll see where this opens up Sunday night in the marketplace. But what will happen is if this can roll up into this area somewhere in the tune of 44.90 and the value area low at 45.07, that's going to be resistance. If this holds the market down for the Nasdaq has a great chance of rolling over, testing these lows, last week's lows and the previous week lows, and then busting down into this high volume node down around the 4,400 area. 4,400 would be a wonderful target. If we roll back up into the value area the value area of last week, we have a great chance of it rolling back up, testing the upper value area, and maybe even going up and testing new highs on that. Now, what should we watch with that? We should watch the actual Russell when this is happening. The Russell takes off and continues to build value over top of the last week's highs, then there's probably a good chance that the Nasdaq may catch up on that. So keep that in mind. Let's take a look at the ES real quick. All right, the ES had sort of a B formation, if you will, last week. So it had sort of double balanced areas. It's very interesting. It came back into the value area last week, and then of course now the area is this high volume node right here. If it gets rejected from this high volume node, then we're looking for it to come back and test the value area low and then maybe break down and test this last most recent low. If we trade above that and trade out of value, most likely we're going to test back up here into this most recent high. Again, the ES is something that's going to have to be watched along with the Russell. If you're an E-mini trader, keep an eye on the Russell along with the ES. Same thing with the NASDAQ. Now, with the Russell, again, we're right up at the highs of last week. We suspect that they'll test these highs and maybe break them out. Now, the key here is, will they just do a head fake? Will they push it up against there and then they'll crush the traders who are late to come to the trade? If they do and they start rolling back into this area of last week, we need to watch the actual value area. I think at this point, if it gets back into this last week's range, there's a chance it could roll over, but it's not guaranteed. Once we get back in the value area of last week, I think we have a great chance of testing the lower value area, excuse me, and then going down and maybe even testing the lows. It just depends. It will also depend on FOMC too. So if we don't get something early in the week like Monday that really has a clue to what's going on, then we probably need to stay on the sidelines for Tuesday before Wednesday. I don't think anybody wants to get caught in that mess if we get unexpected news from FOMC or anything that goes along those lines. Let's take a look at some other markets inside the futures complex. Crude is something we always get a lot of messages on, asking us to take a look at crude. Now, crude has been an interesting instrument to trade recently. Let me back this up a little bit and let's take a look at this. We obviously bottomed out at that 26.05 back in February, and since then this thing has been off to the races, a little pullback and back up, making another higher high. Okay, so technically we're in an uptrend right now. Now, what breaks that uptrend? I would say a break of this last week's low of that 39.81 area. Okay, right now you can see what happened, and they're hell-bent on taking this thing higher as it stands right now. Looking at the profile, they really did an engulfing week last week. I call this the oops trade, if you will. They opened it up. They stuck their head below last week's low. It got people stuck short. All the early shorts in here said, "Oh, we're going back down. You know, everything's bad in the oil market. We're going back down." They got stuck. They got trounced coming in here, and of course the rest of the week they moved the market up, they balanced, they moved it up, and now they're currently balancing as well. So where are areas of interest here? I want to watch that 43 area, 43.05 to 43. That's of interest to me. If they break that, they're probably going to run it down to 42.32. If you're going to get short in here, these are either scalps, which we don't like. We're more position traders and swing traders. But if you're going to get positioned in here, these are going to be scalps. We'd like to see the market go up and make a little bit more high and then get rejected, and then have some defined risk up here so we can get short and see if we can eat our way back through all this stuff. But for now, if you want to get long, these are areas of interest where you could establish a position. Okay, but if it gets below and starts trading below that 42 area, we could slide pretty quickly down to that low last week. So just keep an eye on that. Let's go look at the yen. We're not going to trade the yen, just be real straight with you. The yen has been all messed up. It broke out, but one thing I did notice when I looked at this, and this is important for you guys to learn, we had this nice consolidation right in here from the highs of looks like 87.11 down into that that 80 area. A lot of back and forth. There were some opportunities to possibly take some trades in here. It's not probably the ideal setup, but what happened is when it did break out, you look at the volume that came into this market. It actually started building volume. It also started finding value above these areas. That is very bullish. It gave you plenty of opportunity to establish a position and get long in here. Now we've seriously gapped down. We took out the previous week's low, and we've actually stayed down there. We're gonna have to watch this. Most likely we're back. Well, we are back in this volume area. If I was to run a monthly volume profile, this would probably be right into that profile, most likely into the value area. Most likely going to roll down, test the lower area, could go back up. at that point. Again, we're not going to trade it. This is such an unpredictable product right now. Japan is doing all kinds of crazy things over there. Uncle Abe is trying to do anything he can to mess it up, and he's doing a good job of it right now. The euro, okay, Draghi, our buddy Mr. Draghi, Mario, is doing the same thing. He's throwing everything and the kitchen sink at it, and it's crazy. It is absolutely crazy market. We saw back in March, well, let's go back further. We went back into November last year. We saw that monster move off his announcement. He made an announcement and he tricked everybody. It was one of the largest one-day moves in that time frame. Went sideways. We saw another big pop on that. This was a big congestion area of volume. And of course, using the profile like we do, and what we teach is that we know markets have a congestion period, or what we call a balance period, or what they do is they find value, and then what happens is they go ahead and break out. They price discover, and of course, if you see this, we had 2 weeks of price discovery up, and then it moved back to where? The value area, which is right where all the volume was. Again, from that point, we went ahead and broke back up. Now we're trying to roll over, or we're trying to find value in here, and that's what we have to see. Now, we're not going to touch the euro at this point because the euro will be affected by the FOMC announcement. But if you want some areas of interest, we have right here where we finished on the low. We took out last week's low, or the week previous low, and then what happened is we closed below that low. We have to watch that level, which is a previous week's low. And then what we have to do is watch this last week's low. If they start trading below that, we could see a move down into this low, which is 5 weeks ago, and that low would be in around that looks like 117.64 area. And they may poke it down into this high volume node as well, which would be the 113. Let's see, excuse me, 114 area and some change on that. So, but we would wait until the actual FOMC announcement comes out, unless we get a monster move on Monday that would give us some opportunity to take advantage of it and maybe position ourselves. Let's take a look real quickly at the bonds. Bonds had one heck of a week. Bonds have been up and down, and it looked like at this point they were going to put a pattern in, like sort of a cup and handle opportunity. And they still may. However, last week may negate that a little bit. Last week we went ahead and broke the previous week's low and ran out of balance. If you notice, they started way high. Now and then what happens is they almost to the top of the previous week, they thought everybody was probably positioning themselves long, thinking, okay, they're going to take out this high and continue going. This is a nice cup and handle pattern. And let me just explain something. This is why volume and price matters, and nothing else. Because we can have patterns, and I do like patterns, I admit, but they don't always work. And at this point, this would have been a dangerous trade until it actually got back above there, okay, and stayed there and started to create value that you could trust to take out these recent highs and then go higher. However, the Johnny come earlies got stuck here, and they actually crushed them on the way down into this previous week volume area, high volume node, and then from there that we established again a balance area, or where the auction was bounced back and forth, and then they broke it down again. Now we are establishing a balance area again, well below. We do have a gap up here. Now this is such a big area, and we're coming into FOMC. It is my guess, and it is just a guess, and we'll have to watch price and volume, but most likely we're going to probably go sideways in here until we actually see the announcement on Wednesday. Once the announcement comes out, we'll be watching the areas down below these lows back in March, which in this case would watch the 160.22 area, or just in probably up into the 128 area. And then of course the high volume node up here, 165.07, all the way up to the highs of last week at 166.17. So we watch those. We're going to watch for rejections of those areas. If we get rejected, that's an option or an opportunity to define risks, get short or long, and then look for it returning back into value areas or into the range on that. Same thing with the notes. The notes are real similar to the bonds in the structure right now. Actually, their structure is almost a little bit better than the bonds, but the same thing applies, same types of areas. Now, gold is something that's I wanted to point out, not because we want to establish a position, but I want to point out the pattern here. Not a pattern in the market. I guess you could call this a pattern. There's a cup and handle here possibly, but the pattern is this: volume and price finds a balance area down below here in the 10, 40, 50, 60 areas. And then what happens if you look here, price breaks out of that on heavy volume. If I had a volume, a regular volume indicator, you'd see that price is pretty heavy here. It went straight up. And then what it did is it created a balance area above this volume area. Now again, if I went back and ran a monthly volume, you see this is probably pretty heavy in here, and then it would be establishing a volume area above that. That was an opportunity where you could find an entry and take advantage of this nice move on gold. As you can see here, again, if I go back, let's get my writing tool here real quick. You're going to see that we have a area here where all the volume has been. So now we're balancing in this area, and let me go back and touch on this area here, just like we talked about. There was a volume area here where all the volume was establishing. It broke out and established a balance above that area, and then of course it broke out to the upside. That was an opportunity to have a low risk, high opportunity trade. We are sitting up in here. This is very bullish at this point in time. Now the trick is this is everybody will be watching the dollar. If you watch gold, you watch the dollar. If they break this up, okay, and the dollar breaks back down, then this thing's off to the races. If this thing breaks up and the dollar doesn't break down, then this thing could roll back over, could be a head fake. We will be watching volume and pattern, volume and price in here. However, right now there's nothing for us to do. This is a bullish pattern though. We will watch that, but it gives you some areas of interest on that. All right. I think they've covered everything for you guys this coming week. Again, just remember, it's going to be a crazy week. FOMC is coming up on Tuesday. A reminder of that, and of course the announcement on Tuesday. And then of course, come take a look at us at marketprofiletradingacademy.com. A lot of great things on our website. We have a lot of free resources. You can register to work with us. We have a lot of mentoring and training workshops as well. Give us a contact if you have any questions. Otherwise, you guys have a great trading week. We'll catch you on the next one.